Okay, everybody, welcome to the webinar. Let me know, please, they could hear me. Just type in where you're from so I know you're hearing me, and then we'll get started. Just type in where you're from. Go ahead, folks. Okay. Francis, I can always count on you. Thank you so much. All right. Glad you can hear me, and I'm sure you can all see the charts. So let's get started. This is an exciting, interesting webinar. I think everybody will find it really useful. So, talking about trading the market open. My name is Lee Goldstein. I'm the trading director for 10 Minute Trades. Please remember, all the trades we discuss are for educational purposes. It's possible to lose money trading futures, so please trade carefully. Just a couple of things before we get started, or we're already started, but the point is I want to make some things clear about the way that we trade so that you understand the company 10 Minute Trades. We're trading appointment-based trading. We create a schedule for almost everything that we do. That's why market opens are perfect for the type of trading we do. We create a schedule every week. We send that schedule to our members. We use the NinjaTrader platform and we trade futures. So we're in earnings season right now. We made money this morning trading earnings, but we weren't trading stocks. We watched the stocks, but we were trading futures on earnings. We have many different setups. So if trading the open is not for you, if you don't like trading earnings, we still have many different ways that you can trade with us. We have a whole setup called the magnet trade. We have reversal trades, trap trades, which are specialized reversals. And our software can be used by any discretionary trader using the NinjaTrader platform. So you don't have to just trade only the way that we trade. It's important to understand that there are many setups built into our software. And in our trade room, we have added more and more different ways that we trade the news. We don't just trade spikes. We don't just trade opens. We have many different setups. My goal, besides helping you to make money on specific trades, my ultimate goal is to teach you a method that you can have for the rest of your life when I'm around or not around. I want you to be able to trade the way that I trade for the rest of your life. Trade opens, design your own trades, trade breakouts, understand the news, understand how the news affects the markets, and that will help you to become a more successful trader. That's my goal. Of course, I want to help you make money, but I don't believe that following somebody is the best way to make money. The best way to make money is understanding a system and making it your own and learning how to do it. We have software, we call it JOBB News Trader Software. Okay? In that software, we have different setups, reversals, continuations, spike trades, open trades, earning trades. You can design your own trades with our software. And our system is very simple. There's four main parts: the weekly schedule, daily trade reports, some of the events that we trade, get reports. We have trade room access. I believe trade room access in conjunction with using our software is the key to becoming an expert at what we do. So I highly recommend anybody that becomes a member, make sure that you can come into the trade room because that's where everything flows from. We look at various calendars that are free to find our trades. In other words, somehow, some way, there has to be a methodology to find the events we're going to trade. ForexFactory.com, investing.com, financialjuice.com. There are many different calendars that we teach you how to read the calendar, how to find the various events. I've done many webinars on this subject. We're not going to revisit it today, but just know what you should do is become a member of our YouTube channel. Go to 10 Minute Trades, YouTube. Search, just go to YouTube and search for 10-minute trades. Join our YouTube channel. We have many, many open webinars that are obviously free that you can watch and learn all about our method for trading. And you can tell if this is the kind of methodology that you want to get involved in. Use the calendars, back test the events. I'm going to show you today what I mean. And then pick the events that best fit your schedule. You don't have to trade every single event. You pick the events that perform the best. We tell our members what are the best performing reports, and we try to trade the best performing reports. That's the goal. That's the smart way to do it. So we have our news trader software, our magnet trade strategy, reverse continuations. Those are just a selection of setups that we use to trade the news. There's more than one way to trade each event. We try to always find the best way to trade a specific event. Our software is a custom strategy. It installs, it's an add-on to NinjaTrader. As I said, it has multiple setups. It automates your trade entries, your targets, and your stops. And it's also a super ATM program. It's an automated trade manager. Sometimes you'll want software to trail your stop. Other times you'll trail your stop manually. You always have a choice. When you use software, you can just simply tell the software, trail these stops on this particular event. Otherwise, NinjaTrader has what's called chart trading, and you can simply move the stop manually. And I'll show you what I mean in a few minutes. I love trailing manually, particularly in a discretionary trade such as the market open. A market open is clearly a discretionary trade. You may not always want to take it. Something might be occurring in the market at the time of the open that will convince you it's not a smart time to take a trade. So keep in mind that market opens are difficult to trade. They can be inconsistent. All trades can be inconsistent, and it's important to understand why are robots such a difficult issue to get working? Because the markets change. A robot gets programmed, it trades the same way, then the market changes the way it's behaving, the robot has to be configured. Robots are just as difficult to trade as not having robots because you've got to configure them over and over and over. AI will probably get us there at some point down the road where very possibly the market will tell AI how to program the robot. And we're getting close, so it's very interesting times that we live in. You can do all the trading that we do in a cash account, in a prop account. We are a Bullinox affiliate, and we would love for you to join Bullinox. Right now they have a fantastic sale. I'll type it in. I don't usually push selling at all, especially during a webinar. But you can go to their website. Here's the link. It's very simple. And they have a code right now. It's just PTF91. I think it goes until tomorrow for a 91% discount on all of their setups except the $25,000 account. So it's only about $16 a month to get started with a prop account on Bullinox. And look, there's a million different prop companies you can use. Just one piece of advice. Try not to create horrible trading habits for yourself if you're using a prop account. Because let's be honest, prop accounts, when you lose, you're losing simulated money. It's not as serious in some ways as trading real money. Obviously, when you develop an account and you're getting funded and you've paid much more to get that account funded, it gets more and more serious as you progress along the pathway. But prop account trading can be guilty of teaching you bad habits because the risk seems like it's not really there sometimes. Trade in a prop account the way you would trade in a cash account. That's the best advice I give people in general. Always trade like it matters. Don't trade 100 contracts for a lark unless you're planning on building up to trading 100 contracts. So let's talk about the market open. Couple of things that I think are really important to understand. Market opens are inconsistent. So what does that really mean when you say an event is inconsistent? It means that one day it'll trade in a specific, it'll behave in a specific way, and another day it'll do the exact opposite, or it'll do a slight modification of the way you're trading. And sometimes you'll see consistent inconsistency. For instance, maybe you'll get a month straight of really great market open trades. And then all of a sudden, the market will change. The news profile of the markets might change. Something will happen in the world that everything is different. And the market setups are radically different. So one of the keys you want to keep in the back of your mind always is just to be aware that things change and they can change on a dime. Another good strategy, very possibly, might be because market opens can be inconsistent, you might want to take profits quickly on target number one. That way, even if your trades get less consistent, you can have a system in place that at least more often than not, you're getting filled on your first target so that you're not turning winning trades into losing trades. So there are techniques you can use. Our software has various features. If a target gets filled, it's possible in our software to automatically move the stop into a safe position. What do we mean by a safe position? If you enter the trade at the price $2 and your stop is at 180, so let's say you're long at $2 and the price goes to 185, you're down 15 ticks. If the price goes up to over $2 and you can move your stop above $2, that's moving your stop to safety. So if your first target is 210, our software can automatically move the stop to break even to 200, which is where you entered the market. Those types of techniques can help you to trade more successfully than always leaving your stop untouched. There will be times you'll leave the stop untouched, but there are times when it does make sense to move it. So you got to be aware of that, and you need to practice the various moving of stops, trailing of stops. It's important. If you're going to trade the open, study the open. Don't just randomly start trading the market open tomorrow. I'm going to show you how to download data so you could practice a couple of weeks worth of market opens. And then you could at least go into your trading having knowledge of the method you're using. You don't want to do anything with trading, anything involving your money, randomly and willy-nilly, as they say. You want to plan things out, have a purpose, and be smart about the way you put your money at risk and understand the risk. Okay. There are more than one market opens. More often than not, when people think about the market open, they're thinking of the ES or the NQ or the YM. Those are the most popular market opens, and those are called the indexes, and they open at 9:30 a.m. Eastern Time. That's the traditional market open. Now, the traditional market open is probably considered the most volatile market open. You might be able to get an edge for yourself by trading the evening market open, 6 p.m. Eastern Time. After the 1 hour close of the futures, the markets reopen. There's an hour-long pause that creates a gap, that creates a volatile trade in most cases, but usually nowhere near as volatile or risky as the 9:30 open. So if you're interested in trading market opens, you might want to experiment with other opens besides just the 9:30 a.m. traditional open. So 6 p.m. Eastern Time is another great market to practice trading. And keep in mind, all of the futures, almost all the futures, reopen at 6 p.m. You can trade the NASDAQ, of course, all the indexes. You can trade gold, you could trade oil, you could trade copper. All different instruments are available to be traded as an open. The traditional open is the indexes, the MNQ, the ES, the NQ, the YM. Those are the ones that people traditionally think at 9:30. Two other very popular opens that many traders look at are the gold open, which is at 8:20 Eastern Time in the morning, and definitely the oil open, CL, 9 a.m. Eastern Time. Those two opens are very popular to trade. Obviously, 8:20 for gold, 9 a.m. for oil. Other things you want to keep in mind. If you're an oil trader, at 2:30, oil settles. So even though oil continues trading after 2:30 p.m., the volume starts to get very low, and it's really recommended you should finish up most of your oil trading before the traditional market close at 4 p.m. So you want to be aware of the times that the instruments trade that you decide to trade. So it all comes down to educating yourself. If you become an expert in one or two instruments. Don't try to learn every instrument at once. It's too much. There's too many different nuances to each market. But if you concentrate on one or two markets to start, I think you'll have a much better success rate in any of the trades that you do. So for instance, if you decide, hey, I really want to learn about trading the market opens, fine. Choose the MNQ and maybe the MES or the ES. Don't try to do the RTY, the gold at 8:20, oil at 9. Keep it simple. Start off one or two trades and work your way up from there. I'd highly recommend doing it that way. So once again, the index is open at 9:30, NQ, ES, the Dow. They also reopen at 6 p.m., which again is a lower volatility open to trade. And then gold, it should say 8:20. Let me fix that because that really bugs me that I got that wrong. It's 8:20 for the gold open, and it's 9 o'clock for the oil open. 8:20 for the gold open. Choose an open time that you're going to trade, choose the instrument, and then choose a setup. I like two main setups for trading opens. Clearly, breakout trades are always great for many, many, many different types of setups. So today, we just took a test trade on the MNQ, and we took a trade on the YM. Now keep in mind, I've been trading news for many years. So if I decide to start trading the open tomorrow, I'm not a newbie. I'm not trading the open as if I never traded the open before. But even myself, with all the years of experience that I have, generally, I won't trade real money, at least for a week of practice trading. Now, one of the nice things about prop accounts is you can get a Bullinox account right now, and that account is $15.75. You can practice with that account. You could also use NinjaTrader, pay nothing except fund your account as a cash trader, and practice in sim. So don't forget, you still have simulated trading in NinjaTrader if you don't want to spend the time, effort, and energy to learn all the nuances of being a prop trader. You don't have to trade that way. There's nothing more fantastic than having $1,000 profitable trade in a cash account and taking out $500 of profit that day. You cannot do that in most prop accounts. There's rules. You got to follow the rules. Most traders aren't taking money out the same day. I know there's some, yes, I know. But the average person, they're building up to it. So keep in mind, Everything is rules, everything is limitations. There is no magic. Yes, people claim you can follow them and they're perfect and they, have the magic sauce, the magic secret. It's been my experience that there is no magic. And if you don't put in the work, you're not going to have success. You've got to put in some work at least. Now, breakout trades and range trades are two of what I feel are the strongest ways to trade the open. So this morning we put on a market open trade. Now, I had intentionally planned on our weekly schedule, and it's one of the fun, what I think is one of the fun things of being a member at 10-minute trades is, we always have a weekly schedule, and in advance, you are going to know almost always what we're going to do that week. So we knew that PPI was coming out this week, and I had a feeling that it might affect the market. All right. PPI came out. It's a family money trade for us. That means it's a setup that we recommend highly that all of our members trade. And if you traded our MNQ setup this morning, you made money. Our MNQ setup was a nice winner. Also, our CPI trade was a winner yesterday as well. And we had two winning earnings trades this morning. We are serious and we take what we do very seriously and try to trade the best of the best setups. I knew we had PPI. I thought that it might be a good educational moment to practice a market open trade. And everybody's interested in trading the opens. We talk about it in our trade room all the time. And we have members that have been trading the opens. So we put on what I thought would be a pretty reasonable starting baseline market open trade for the kind of volatility that we're seeing in the markets today. All right. And let me show you the trade and what we did. Give me half a second here. Where the heck did it go? Where is my open trade? Come on. Here we go. All right, so two different trades we put on. Obviously, the market is at 9:30. Our software makes it very easy to put a trade into the software. All you have to do to put a trade in our software. So for instance, this chart is the MNQ. You just right click the chart, click on strategy. It opens up our configuration screen and I just double click on the name of our software. We were putting on a breakout trade. It already says breakout. I'm putting in a time, 9:29:59. I had a bracket of 30 ticks. I had position 1 was 1 contract. Position 2 was 1 contract. My first target was 25 ticks. My second target was 50 ticks. All I do is type in the number. And my stop, MNQ, my stop on the MNQ was 150 ticks. It's only 50 cents a tick of risk. So it's $75 per contract of risk. That's not very much. I put on 2 contracts total, 150 tick stop, and I set it up so that if my first target was hit, we have a feature called Target One Stop Move, and that moves the stop automatically to BE, break even. I then just simply choose an account that I want to trade in. If it's a prop account, I choose my prop account. If it's a cash account, I choose my cash account. We label the trade and we set the trade up. That's how hard it was to set up the trade. It takes about 2 minutes. We do it every day in the trade room. We set up trade after trade after trade so that by the time you've spent a week in our trade room, most people are already ready and able to start taking trades if they know NinjaTrader. It's not hard. And we're going over the setups over and over again every day, every time we have a trade. sometimes 3 and 4 times a day. So we got to the market open. We put a YM trade in also, and I'll give you the setup for that because I think they're good baseline trades to start trading the opens with micros. And you could start tomorrow practicing with these setups and with a couple of setups I have that some of our members are trading as well. So you're going to see the market is getting close to 930. We have our MNQ trade in the middle, and we have our YM trade on the left. Okay. The market's going to open, and we have a simple breakout trade. I truly thought the market was going to go up this morning. I thought we were going to get a burst because all the news was good. The market earnings, the bank earnings were pretty good. The PPI was great. All the news was really positive, but the market decided to fill the gap. The MNQ had a small gap up, and sometimes market opens will fill that gap. They'll go the opposite way. So you want to know about that. You want to be aware that could happen. This particular trade, remember, we had a pretty good sized stop. It chopped around a little bit. It went against us a little bit. Did we run away? Did we cancel the trade? No. We just stayed in the trade. Our YM on the left still had not filled. The YM started a little bit quieter. The MNQ eventually, watch what happens. It's going to go down. It's going to hit our first target. The setup that we created will move our stop to safety if it hits the first target. There it is. Our stop is moving to profit. Now I increase my targets. Who knows how far this market's going to go down? And I increase the target big time so I can manually trail my stop as the price keeps going down. We call that trail baby trail. And that's what we did. We trailed that stop down. Eventually the market will change direction and take you out of the trade. That's what happens. Those are the favorite types of trades in a breakout. When you get a breakout that fills your first target, allows you to move your stop to safety so you can trail. That's the best trade. Those are my favorite trades. They're easy, they're stress-free, and you can make very nice profits on them. The MNQ was a solid profit. Anyone that traded it made money. The YM, you'll notice, the YM really took its time in filling. It was, let's see how long it took. It took the YM 36 seconds. It still hadn't filled. It didn't fill. Watching here, it's now 45 seconds. It was really just chopping around a bit. That's why we study. We study because we want to find what we think is the best bracket size so that you get filled more often than not in the proper direction. That's the whole concept. It's very simple. Get filled in the right direction. You'll notice the YM worked beautifully this morning, and I'll give you the setups so that you could practice starting using today's setups as a baseline. When I say a baseline, what I mean is you have to be willing to modify your setups, sometimes based on market volatility. Maybe your setup is a simple 30-tick bracket, but you notice the market is moving in really significant amounts of ticks before the open, much busier than say it was yesterday or the day before. There's things you can do to help to make your trade more successful, more giving it a greater probability of success. Sometimes you can increase the bracket size, and if you increase the bracket size on a breakout trade, you should normally increase the stop size as well. Because think about it. If you have a target that you've tested and you've now increased your bracket size, your target is smaller. So you want to also increase your stop. The bracket is bigger, you're closer to your stop. So if you increase the bracket, you should always increase the stop, usually by the same amount of ticks that you're increasing the bracket by. So that's a good technique to remember. So this morning, that was a simple breakout trade. Another very interesting way, you know what, let me go through my slides and do it in order. So market opens, trading the indexes, breakout trades are a great way to start practicing market opens, and they're very easy to set up. Okay, let's get back to our slides. So once again, quick recap, you're going to choose a time to trade the open. Choose the open you want to trade. If it's 9:30, fine. Choose the instrument, choose the setup. Breakouts, one of our favorite setups. Test your trades. We're going to get into what do you do if you're just not sure how to do a certain trade, or you want to trade a new instrument. Maybe you want to trade the gold open, you never traded it before. You've got to know how to test your trades. There's two ways to test a trade. There's quick and dirty, and then there's market playback. So let's talk for a minute about this morning's PPI report, because testing a trade is the same for the market open as it is, for instance, for the PPI. Now, the market PPI this morning, that trade was at 8:30. There's a very important tool that you can use that helps to tell you how big the spikes are on an event that you're trading. Market opens have spikes, but a market open, you might look at the spike over a few candles rather than just one candle, and that makes it somewhat different than, say, a PPI trade. But the methodology of finding that type of a spike is still the same. So when you want to start testing your trades, if you want to test a breakout, whether it's a market open breakout or a news breakout like the PPI, if your trade is a 1-minute chart and you're trading with NinjaTrader, you find that 8:30 time. If you go to the crosshair and turn it on local, you can see the crosshair in relation to the time at the bottom of the chart. So if you go to the 8:30 and then go to the next candle, 8:31, that's our trade candle. All right. That spike candle is what happened when the news was released. Okay. That's very important to know and to understand. To calculate that spike is very simple. You just go up top. I'm going to turn off my crosshair. Go up top to the pencil, click ruler, and then just go to the bottom of the candle that we just looked at. Turn on the ruler, hold down the mouse, end it at the top, and that now I can see the Y value, 32 ticks is what this candle was. So if I'm trading an open and I look at a selection of candles, for instance, maybe I want to look at 5 minutes, up to 5 minutes worth of candles. So I might want to take my ruler, start at 8:30 when price first opened, and then look at the spikes. What was the highest spike for the first 5 minutes? And it's this candle right here, 43 ticks. So if I want to try and stay on the right side of an open, I may want my bracket to be no more than 43 ticks, right? If it's greater than 43 ticks, there might not be any profit left, okay? If there's no movement, if it's only 8 to 10, 11 ticks every candle and it's just consolidating, then you don't want to trade that, okay? But if all of your moves are within a certain range, in other words, you've got 40 ticks here, 38 ticks here, 22 ticks there, 35 ticks there, that's fine. You can have a bracket, 18 ticks, for instance. If all your movement is no greater then 43 ticks for 5 or 10 minutes. You can create a setup that has a bracket of 18ish, and your targets could be 20 ticks and then possibly 30 ticks. So that if it goes to 40, you'll hit your first target, you move your stop to safety, and then if it keeps going, you'll hit your second target. But the key is you want your bracket to be, I said larger than the target, I mean smaller than the target. You don't want your bracket to be so big that all of your profit is left in the bracket. So if all of your spikes are 30 to 50 ticks and you have, say, a 15 tick bracket, then the idea is if your trade is moving well in one direction most of the time and then reversing and doing the opposite in another direction, then you can set up a breakout. If you're getting 30 ticks up, 30 down, 40 ticks up, 20 down, if it's constantly whipping, then a breakout trade needs a much bigger bracket to contain the whipping within the bracket. You need a bigger bracket when there's a lot of whippy behavior. When the behavior is more in one direction, that allows you to have a smaller bracket. Ideally, in these types of markets right now, we're seeing 30 tick brackets on the MNQ, 30 to 40, I would say, for breakouts. YM also can fit right now, maybe even a little bit smaller, sometimes on the YM 25 on your bracket size. But I'm going to actually show you some very specific setups. These are just some things to think about when you're designing your own trades. Let me quickly just recap the way that you want to look at an event. A single event, such as a PPI report or a jobs report, you check the spike right after the 1 minute candle after the time of the trade. So if it's an 8:30 trade, you're checking the 8:31 candle. So on gold this morning, if I want to trade the PPI and I want to get a setup for next month, I'm going to test 3 or 4 PPIs and I'm going to look at the candle at 8:31 on a 1 minute chart. And I'm going to measure that spike and I'm going to note that spike. And I'm going to keep track of them. And like I said, you could do the same thing with opens. If you have 5 minutes of spikes, you can create the same kind of trades, understanding that just because it's more of a range of time doesn't mean you still can't create a bracket trade. But another great thing you can do is create a range, and I'll show you how to do that. But if you take that 1 minute candle, notate the spike on 3 or 4 PPI reports, that will give you the number of ticks that those trades are spiking. That tells you how much movement there is when the news is released. Then you want to look at subsequent candles. Is it reversing immediately after that? Does it often keep going higher and higher? If it often keeps going higher and higher, it's more prone to being a breakout trade. If it's often reversing, then it might be more prone to being a specialized reversal trade called a trap trade. But I've digressed a little bit too much. Let's go back to the slides. That's the way you check your events to see the kind of spikes that each event had so that you can start setting up trades around the size of the move that makes the most sense. The ultimate best way to test a trade is to do market playback. Market playback, to me, is the most important tool that we have with NinjaTrader. And I'm going to show you how to do one market playback because, like I said, if you know how to do one simple market playback, you know how to test every single trade known to man using NinjaTrader. So what you do is disconnect any live connections that you have. You go to connections, disconnect. Let's say you want to practice this morning's market open on the MNQ. So you go to tools, you go to historical data, and you download today's MNQ data. And this is the way you download any data. So you get the market replay data, you choose today's date, July 16th, change the date. The contract on today's MNQ was MNQ 925. Click the contract, just click the download button. The MNQ data is done downloading. It's easy to download. 5 days of data, just do yesterday's, click the 15. You could do the day before, right, Monday, the 14th, and we now have 3 days of data downloaded, so you could practice the MNQ if that's what you want to practice. You want to practice gold, just change your contract to GC 825. That's today's gold contract. Just make sure you have the right date. Obviously, it's not the 17th, it's the 16th. Download the data. So we now have gold today downloaded in 3 days of the MNQ. If you want to practice today's open, it's real easy. Just go to connections now. Connect your software, your live feed. Sorry, my mistake. Connect your playback. Connect your playback. Go to connections, connect playback, connect continue. You'll get a little tape recorder control panel right here. That's our little tape recorder. Put both boxes on today, July 16th. And then in the blank space, right click the mouse. When GoTo becomes enabled in a second or two, put the time of the trade that you want, time of the event you want to trade. So it's the market open, right? Don't put exactly 9:30. You want to give yourself some time to get ready. So let's put 9:29 and 15 seconds, okay? AM, okay it. Now you're just simply going to put your chart on MNQ, because that's what we downloaded the data for. MNQ 925, okay? If you want to just watch the market open before you trade it, you can do that. Press play. Now, there is a bug in Ninja, just as a heads up. Sometimes it resets the time to 12 a.m. So just right-click in the blank space, put in that 9:29 and 15 seconds again, and then it'll be fine. I've been working for years to try and get it fixed with them. We can't seem to solve it. If for some reason you don't see your data, just click the F button and almost always the data will show up. If you still are seeing data that looks weird or malformed, right click the chart, click reload all historical data, and that will make sure that all your data has reloaded in. You want to make sure that under the ask and bid, the A and B over here on Chart Trader, you see numbers. If you just see zeros, it means your data hasn't downloaded properly, and in that case you want to re-download it. Understand that when you download data, you cannot be connected to the playback server. So you'd have to disconnect playback, download the data, then reconnect your playback. So we downloaded the MNQ. It's July 16th. It's 9:30 in the morning this morning, and we want to put our trade on. So we have a winning trade on the NQ that we traded this morning, and it was a breakout. So I'm going to right-click the chart, click on Strategies, double-click News Trader. Trade type is already on breakout. That's our default. Our time was 9:29:59, so I'm going to make sure the time, East Coast time, is 9:29:59. Most cases you'll be trading your local time. Our bracket was 30. The market wasn't that volatile this morning. It was manageable. I had a target 1 of 25 ticks. I had a target 2 of 50 ticks. Also, position 1 was a 1. That means I have 1 contract for each position. Position 2 was a 1. I have 2 contracts, 1 position for each. Now, the number of my stop ticks This morning we used 150. If I'm trading the MNQ open in general, I'm going to use a 250 tick stop. It's $125 of risk per contract. That's very reasonable for a market open trade. And it's a size of a stop that if you use a very big stop, you will survive lots of whipping and it will give you a greater opportunity to have a profitable trade. If your stops are too small, a lot of new traders make the mistake of using stops that are too small because they think it reduces their risk, but it really doesn't. Using a stop that's small, yes, it reduces your risk theoretically by being less money that you lose if the trade fails and you get stopped out, right? But if your stop is too small, you get stopped out too often because your stop is too small. So don't think you're actually lessening your risk. You're increasing your risk by using a stop that's small. Use the right size stop. And that means you got to look at some trades. Practice a few trades. Come into our trade room and trade with us, right? Do it with somebody that knows what they're doing in the beginning. It will help speed up your learning process. 30 bracket, 150 tick stop we used today, so I'll use that. We had a 25 and a 50 tick target. I label all my trades. We're not going to get into why now, but we do. MNQ open, and it's in the playback account. Apply it, okay it. And now, when we press play and turn on the trade, right? Enable the trade by turning it on, pressing the checkbox and enabling the check. Press play. Now in 15 seconds, right, when our tape recorder gets to 9:30, our orders are going to show up on the chart, putting our time and our date. The date is 7:16 in both boxes. Right click. I'm going to 9:30. 9:29. I know what I did wrong, folks. Let's go to 9:29:50. It's me, and it's because I'm tired. And now I'm going to load the strategy. And I have a template, so we don't have to retype it in. Just go to load, MNQ open webinar. I have a million strategies, as you can see. When I die, those will be worth a lot of, no, I'm kidding. You can easily save a template inside of NinjaTrader. MNQ open webinar, there's our strat. 9:29:59, it'll trigger. 30 bracket, 25 and 50 on our targets, 150 on the stop. We should be good. I may have to retype the time in. Not going to worry if I do. Here's our playback. Put the time back, 9. Now, normally, obviously, this is an anomaly. This is not what you go through when you're normally testing trades. Trust me, I wouldn't be here if that was the case. So 9:29:50 is the correct time to put in. I did not put the right time in. It's always the time. Now, if it doesn't trigger, I give up. There's our brackets. As I said, I put the time in wrong. So what happened in immediately is we did get filled this morning. Now, we have our 150 tick stop. You can always shrink that stop. You don't have to shrink it now immediately, right? Because we just started trading the open. We don't know for sure yet what's going to happen. You might want to keep your eye on the green high of the day indicator, which we teach our members all the important indicators we use to put on their charts. Now, the market is going against us a little bit. It breaks the high. It made me a little bit concerned that it broke the high, but we're doing this with micros. We're only down $80. Your life isn't going to end if this trade doesn't work out, right? It's not going to end. And it's just the way it is. Now, the market's going to start to agree with us. It's going to start, we have two charts, same exact thing going on. The market's going to start agreeing with us. It jerks down, hits that first target. Remember, the target moved to safety. It pulled back. I mean, the stop moved to safety. It pulled back and hit the stop, but you were immediately out with a safe trade. That was a winning trade. Now, sometimes on a market open trade, look what happens if you don't move your stop to break even. Leave your stop alone and deal with the stop manually. So instead of automatically moving my stop, I do the trade over, right? Real easy to redo the trade. We're not going to go through any of that craziness that we just went through. 5 seconds before the open, I can get the software ready to trade, make sure it's enabled, press play, right? It's going to trigger the trade again, but now watch what happens. You can even speed up the replay. If you want to speed up the replay, there's a little arrow there you could press. It's going to go down, and I will speed it up just so we don't have to go through the whole thing. It's going to go up. After it goes up and starts moving in our direction, I'll slow it down a little bit. See, it hit the target, but now I can trail. I can make my target bigger. I can get my stop to safety now. So yeah, there might have been a lot of risk when the trade first starts, but as the trade goes on, I'm able to shrink my stop as the trade goes on. You don't want to leave your stop in its worst possible place. So a lot of times traders will ask the question, I don't like your risk to reward, okay? I really don't like your risk to reward. You're risking 150 ticks to win 50 or 60. But that doesn't really matter because most of the time you're not leaving the stop set to take all that loss. And a lot of times you're having a trade that hits the first target and then reverses. So that's why you can recommend that type of a trade. You're not always sitting there and just letting your full stop get hit. No time, hardly ever, do we let trades constantly hit full stops. So the other alternative is don't trade the open. A lot of times you just can't take certain trades at certain times of the day without using a decent sized stop. Now look, you can also study different types of movement, a different type of trade with smaller stops, and that brings up a whole other different style of testing the open. There's another methodology called using range testing. So for instance, what if you want to trade the open, but you want to wait and see if the market starts to trend after the open? So you could, and sometimes you'll get a trend after the open, maybe in as short a time period as a minute. So our software has a feature called a range trade. You can right click, get rid of our breakout for now, double click on the news, and bring in a range trade. The market opens at 9:30, so we could start our range. Let's say we start it at 9:29, just for argument's sake. And these are some of the things that you would test. You would use your ruler, look at various price action, but you would use these times. You have to test to try to find the best times. But let's say, for argument's sake, just for the fun of arguing, you're going to test a 3-minute range. But starting from 9:29, so you're going to let the market trade for close to 2 minutes before you consider entering a trade. So your range start time might be 9:29, all right? Range start time might be 9:29, and then up top, your entry might be 9:32. And we're going to just do it with the MNQ, 15 tick target, 40 tick target. We're not going to move our stop initially if it hits the first target. And we'll use a stop of, let's say, 150 ticks to start. So we're creating a 3-minute range. we also have a feature, ticks above the range that we want to enter. If you really just want to use the range and you don't want to do any other range calculations, just make ticks above and below the range one tick. All right, one tick. So essentially, we're creating a 3-minute range. It starts a minute before the open. There is a lot of market movement often before the open. And now we're going to go back. Let me make sure everything is correct. With the range trade, there's one other thing that's very important. You want to make sure with the range trade that you've told the software to draw the range. All right? So when you go to your ticks above and below the range, you want to make sure that the software, hang on, I've got to find it here. Make sure that your software, one tick above, one tick below, we said, but also make sure that show the range graphics on chart is ticked. Show range graphics on chart is ticked. That draws the range. Apply it, okay it, enable the trade, and now we're going to watch the market starting at 9:29. Now, you don't have to start at 9:29. You could start at 9:29 and 30 seconds to save a little time if you want, right? If you have a range trade, you don't have to start looking at the market at the time of your range trade, because you'll notice our range has already started drawing because it's past when we first set up the range. The range started drawing at 9:29. So now what's happening is we're creating a range. We're going to enter the market above or below when that range is done calculating, roughly 2 minutes after the market opens. Now, we don't have to sit here and spend a full 2 minutes. You can speed everything up. And then as we get close, we can slow it down. All right, so this is 2-3 minutes of range drawing. And now we're not going to enter the market until and unless we break the range to the bottom side or we break the range to the top side. It gives you time to analyze whether or not, in most cases, whether or not you want to enter right away. In this particular case, a nice downward range had been started. You can shrink your stop to the top of the candle if you want to. You could shrink your stop. If it changes direction, it will take you out of the trade. But the idea is on a market open trade that uses range, you only tested one day. This one day, just looking at what happened here, our range was a little bit too long. If we had a shorter range, maybe 2 minutes instead of 3, we would have had a better opportunity to enter higher up on the range. So look, the point of everything that we're doing here today is to show you the tools. These are tools that allow you to analyze the markets and find trades that can work in a very special setup that you're using. So range trades can be set up with time. Now there's another thing you can add to the range trade. Rather than just entering immediately when the range is done calculating, there's a feature, ticks above the range, ticks below the range. So you could say, I want the market to move even more in the direction of the range. Maybe I want it to move 10 ticks above the range or 10 ticks below it. So instead of entering as fast as we did in that trade, it would have waited 10 more ticks of movement. That's the ticks of movement, all right? Now, obviously, you have to put it at the right time. So we could put it, let's say, at 9:32, for instance, very close to when our orders went on. And instead of entering quite as fast as it did, it pretty much entered our range immediately. In this case, it had those 10 ticks of breathing room that you would have had a few seconds if you wanted it to move your stop and to move your target if you wanted to. If you use ticks above the range, ticks below the range, it gives you the flexibility to watch the setup and possibly adjust the setup before you enter. So a range can enter right away after it's done calculating. If you just use one tick above, one tick below, then the minute you get to the top or bottom of the range, it'll enter. Or you could make the market work through the range even further by adding ticks above and below the range. Range trades for opens are a great way to test market opens because instead of jumping in immediately in one direction, again, you could wait for a range or you can wait for a trend to start to take place. And that's the idea of a range. You can then enter when you see that trend take place. Another interesting feature in a range trade now. If the trade is calculating the range and it hadn't entered it yet, for instance, we haven't reached the end of the time yet for the calculation of the range. So in other words, here you notice we're calculating the range, but our orders aren't on the chart yet, but we're pretty certain we've got a strong trend and we want to enter. Range trade now, and your orders go on the chart, and if you're right and the market continues in your direction, it'll fill you. Very powerful feature of the range trade. So range trades for market opens are another great way to trade any open. And look how easy it was to set up a range trade. Let me show you one from scratch. Let's say you want to trade 15 minutes after the open, okay? That's the time that you love to trade. You watch the MNQ every morning and you want to trade at 9:45, okay? We'll say set up the software, 10-minute trades. Instead of a breakout, you're changing it to a range trade. Scroll down to the range start time, and let's say you're going to start it at the market open, 9:30, okay? Ticks above is just a 1, ticks below is a 1, and make sure turn on the drawing. Range graphics on chart, show the graphics. And then your entry time, 9:45. Very easy to do, 15 minutes, right? You don't have to do anything else, really. Make sure you have a target. You have to have your targets. We have 2 positions, 15 tick, 40 ticks. We'll leave them the same. Break even, if you want to hit break even. Our stop MNQ was 150. The point of this is not the actual setup. It's how easy it is to create a 15-minute range if you already have a setup. I don't have to start the range at 9:30. I can start the software at 9:44, right? And 50 seconds when everything is ready to go, 15 minutes in. And when I enable the trade, the range is already calculated. This has been the movement from 9:30 to 9:44.50, okay? Press play. And then in a couple of seconds, we'll get our orders above and below that range. If you get your breakout above and below that range, it'll put you in the trade. And most often than not, you'll have time to decide. Maybe you want to make your entry a little bit further. Maybe you want to test that market and make sure it's going to go further down. All right? Maybe you want to move your order into the range. Many different things that you have the flexibility to do. But for market opens, which we're really here to discuss, you can start your range at 9:30, and at 9:31 you could end your range, and there you go. You have a 1 minute after the market open. Very often the market will find a direction after the market opens, and it's had time to digest all those orders that are sitting there waiting to get filled. So let me just give you some setups that our members have been experimenting with. All right. Keep in mind that all these setups are educational. Okay. Trade carefully, know your risk. I don't want anybody losing money because they're taking this as the gospel. Okay. These are trades that our members are honestly taking, and they're having good success with many of them. But you have to know how to move your stops. Sometimes you have to re-enter on the market open. We're going to start trading market opens in our room, and it will really teach you techniques that you can use. When you watch other people trade market opens, it really helps because they move around quite a bit. So just to go over today's winning MNQ trade, it was a breakout. Our entry time was 9:29.59. Today our bracket was 30. You could use 2 positions on target 1, 1 position on target 2. Our positions of target were 25 ticks on target 1, 50 on target 2. This morning we used a 150 tick stop. If we get the opportunity to trail and you can move your stop to safety, then we do. That was trade number 1. Trade number 2, we traded the YM. Let me see. Here's the YM opening trade this morning. We used entry time also 9:29.59. We had a bracket of 30. 1 position for contract 1, 1 position for position 2. So we traded 2 contracts. 20 tick target, target 1, 40 tick target, target 2. 50 tick stop on the YM. If our first target got hit, we moved the stop to break even. Okay? That was setup number 2. Now, if you are in this webinar, you will get this video. So all this will be in your video. Okay? One of our members has been trading the MNQ NQ open with a breakout. He enters at 9:30. He uses a bracket of 45, and he has 1 position, 1 or 2 contracts, and his first target is small. It's just 20 ticks, and he moves his profit to break even if he hits 15 ticks. The idea is he has a big stop, 250 ticks, so he's risking about $150 on this trade, ballpark. That's what he's risking. The idea, again, is you're not letting your stop sit there, so your risk is $125 to $150 for the whole length of the trade. The idea is you're going to get your stops into profit because your trade goes in your direction, and you get to move your stop to safety, or you get to shrink your stop, and then ultimately you get to trail. So many times you will have a trade that allows you to trail, and you'll make a nice sweet profit on the trade. Sometimes you'll know you have the direction wrong, and you'll want to just turn the trade off and close it and re-enter on the opposite side. And it's easy to do that. You can just move one of your orders out of the way. There is a way in our software you could set trades up. If you want to choose direction only, you can trade only long or only short. But this was another trade one of our members is trading now, and I think he's doing pretty well with it because he sends me emails every day how he's doing, and he's got more wins than losses trading that right now. He also has a YM open, 9:30. Bracket 20 to 25, a more volatile market. He'll increase his bracket. Position 1 is a 1, position 2 is a 1. That means he's trading 2 contracts. Again, a quick target, 10 ticks. But ultimately, target 2 goes up to 75 ticks. The idea, again, when you start to get some profit, you shrink your stop. Ultimately, the goal is to get your target and your stop safe so that you can trail. If a trade doesn't work out, if it doesn't fill fairly quickly, you could just simply cancel the trade by unchecking the X, and he uses a 40 tick stop on that trade. And then another open trade, YM from one of our members, 930 YM breakout. Again, a bracket 20 to 25. You know what? I think that's the same one. Let me go back a second and see if I have that one. That's the same one. Give me a second. Let me just look through my notes and see if I can give you that trade. Give me 2 secs if I can't find it quick. I may have just gotten the name wrong on one of them. So give me half a second. I want to make sure if I have one more setup for you, I'll give it to you. No, that's it. So it's a breakout at 930, bracket 20 to 25. First target is 10, but the idea trail. If you get yourself, you can move your stop into safety. And if you can get a 50 to 75 ticks of profit, you're going to take it. And that's a 30 tick stop. 30 tick stop. Don't forget, test your ranges with the range trade. I will answer every question. So if there's any questions left over, I'm going to go through every question, I promise. If the open is too risky for you, after all this conversation, you just can't stand it. You don't want to trade opens. And it's understandable. Not everybody wants to trade it. Or Larry. Larry didn't think our trade was safe, okay? He really felt that our setup had too much risk. And he didn't want to trade it. So we have other setups, and they're great for prop accounts. We have our magnet trade, we have reversal continuations, and again, if you become a YouTube channel member, our webinars on how to use these setups, they're free and they're on our YouTube channel. What's the reverse continuation? It's a very simple setup, discretionary. You just click a button and it lets us enter a trade either in the direction of the current trending move or in an opposite direction. The magnet trade is a trade that it's an exit strategy trade. A magnet is a level on a chart that dozens and dozens and dozens of traders look at. They put their orders all around these same levels. So those levels of price attract price. So we have a strategy that we wrote. It exits at those attracted prices. Like a high of a day is a magnet. A low of day is a magnet. Pivots are magnets. Fibonacci's are magnets. Our magnet strategy can be customized. You can do any level you want, or we have an automated high of day, low of day magnet system. So here's the deal, folks. We want you to join with us. Remember what I said. My goal, besides showing you trades that successfully make money, and we have many winning trades, but my ultimate goal is to teach you to use our software so you can have it forever and design your own trades and not need me. I'm not going to do this forever. I'm going to do something else. And you're going to want to be able to design your own trades, to understand how to use playback. But for the moment being right now, you can join with us and learn all about this. You got to learn how to do it so you could take advantage of it. It's like I said before, we already had 2 winning earnings trades this morning. Earnings season just got started, really. We got Netflix tomorrow. Earnings season is heating up. It's one of the most fun times to trade. Our members really enjoy it. We get up early in the morning sometimes and trade bank earnings. It's great. Wouldn't you love to join us and learn how to do that? You'll learn how to do our magnet trades. You'll learn all about our news trader software. We send out daily trade reports. Many of our events, they get a daily trade report. That report, like I was going over the opens, we go over PPI, a possible baseline setup. When we get into the trade room, we hone our setups. So nothing is more important for us than also making sure you come into our trade room. So for us, it's all about being a pro member. I have an awesome deal for anyone that wants to be a pro member. I put our trial back on. I'll put it on for a couple of days. Everything's included. Pro Trade Room, all of our reports, all of our strategies, all the software, trap trade, reversals, magnets, continuations, everything, trading in a prop account, www.gopro25.com. It's just $20.25 for 30 days. It renews For 97 a month, all you have to do is send us an email to cancel. Now, I was going to expire it tomorrow at midnight because I'm probably going to have another webinar on Friday. So we'll probably do a different sale. So I'm going to expire the trial tomorrow at midnight. www.gopro25.com. You can't, the amount of learning that you get in 1 month, it's ridiculous. It's so worth $20.25. All the things you get, everything that we offer, the News Trader software, the whole suite, the Magnet Trade strategy. You'll learn our whole system about appointment-based trading. Choose the events you want to trade. You'll learn how to make your own schedule. You'll take part in our earnings trade rooms, which literally are taking place now as we speak. And we show you how to trade selected stock earnings with futures, trading on a schedule. I do it in the room. I teach everyone, and it's www.gopro25.com. All right. I hope everyone will join us. I guess I'm going to expire it Sunday at midnight because that's what the webinar says. We're going to expire Sunday at midnight, whatever sale we have. If I have another webinar Friday, it'll be the same sale. So let me make sure there's no questions that I missed. You can definitely, Sandy, decide to set your own ranges, okay? The MNQ trade, Sandy was asking what time did the MNQ execute today. It pretty much executed a couple of seconds after 9:30, and the YM was about 40 seconds after. And they both used similar sized brackets, Sandy. They were using brackets of about 30 ticks, okay? So everybody, www.gopro25.com. I can't express how much you will learn spending a month with us. It will help to make you a definitely better trader. You'll understand the markets better. You'll understand the news in a way that you never did before. And you'll have all these great setups that we trade month after month after month. So thanks everybody for joining with us. I hope you enjoyed this webinar, and I'll see you all hopefully in the trade room tomorrow. Take care, everyone, and I'll see you soon.